Hello and welcome into the KE Report. I'm your host, Shad, and today we're getting an update on Sandstorm Gold, traded on the TSX under the ticker SSL and on the NYSE under the ticker SAND. And we're joined today with the co-founder of Sandstorm Gold and the Senior Executive Vice President, Dave Oram. And Dave, it's the first time we've had you on the KE Report, but Sandstorm is a company we've discussed a lot in the past with different analysts, newsletter writers, fund managers. I'm an investor in the company personally, I should disclose. And we had a nice update with Kim just a couple months ago, just introducing the company to our audience. I thought this would be a great opportunity to get an update because you've had a lot of news out recently. You've had your Q1 financials, some different partner updates, and there's some longer term growth initiatives with the company I think it'd be fun to unpack. I guess just to kick things off, Dave, let's start with a review of the Q1 financials, what you'd like investors to know about how things went on the financial side of Sandstorm Gold.
Yeah, listen, we had a very good first quarter, especially with the commodity prices that we had in this first part of the year. It really helped supercharge these things. Of course, that's really one of the amazing things of royalty and streaming companies is that all that increase in the commodity price really just adds to your bottom line. So for us, we ended up having a revenue of close to $43 million US. We saw total gold equivalent ounces of over 20,000 ounces. Cash flow ended up being close to $33 million. And then the operating margins, of course, which were really remarkable for us. So almost $1,800 per ounce operating margins for every gold equivalent ounce that we put in there. So it was a very good quarter for us. Really, I think in keeping with what we've done, we saw production and cash flow from 40 different projects over that quarter, which is great to have that type of diversification. We think that's an amazing part of it. And it allows us to really kind of stay on board for our goals for the year, which are to aggressively pay down debt. But because the commodity prices have gone up, that's more capital allocation for us to think about. We've started looking at doing more share buybacks at the same time too. Not huge amounts like we've done in the past, and still looking at most of our capital allocation and paying down debt, but still being in that position where, hey, we think we're undervalued. We're especially at the commodity prices that we're seeing and the new baseline of commodity prices that we're projecting. So why not spend some money on buying back a few shares here and there when we can? So that's something that we've been doing as well too, even since that Q1.
Well, I want to dive into that just for a second and tug on that string, Dave, just because a lot of people have noted over the last year or so a little bit higher debt levels with Sandstorm. I think to some degree you guys were put in a penalty box for it. Again, this was also a result of a great acquisition that seemed underappreciated by the market at the time, where you picked up both Nomad and the base core portfolio properties from Glencore. And so a lot of people have been focused on this debt repayment and thought, well, wow, you're buying back shares. Should you be doing that or paying back debt? But I think it's a strong statement when any company wants to buy back its own shares because they're obviously saying, as a company, we think our shares are undervalued at this point. Could you speak to the balance there between the debt repayment, the share buybacks, and what the future looks like over the next few quarters?
Yeah, I think we really had a strong goal through 2023 of, listen, all capital that we have and operating cash flow that's available for debt repayment, we just do that. That's our capital allocation stream. Because certainly I think shareholders wanted to see that in an increasing interest rate environment. However, with the commodity price going up so strong over the first part of this year, and us being very effective in paying down that debt, including some of these non-core asset sales being part of that, that's allowed us to really think about capital allocation in different ways. We don't get that same sort of question these days as much about the debt and the addressing of it. But even that said, we still do want to have that as our number one capital allocation, both to really reduce our interest expense, of course, but also to make sure that that capital is available to us. But our share buyback program at this point, it's not aggressive. It's certainly not what we've done in the past, but we did want to allocate capital that both to send a message and let people know that we do think that the share price is undervalued, but also because we see it as a good accretive way to pay back shareholders as well too, of which both management, including myself and Nolan Watson, we really are. We see ourselves more as shareholders rather than employees of the company. That's because that's really where the bulk of our net worth is tied up in.
Well, and Dave, this might be a good opportunity for you just to share your background. You are the co-founder, along with Nolan, of Sandstorm Gold. Maybe just share your background in this industry, in the space, and then how you view the big picture of the company as the co-founder.
Yeah, so I'm a geologist by background. In fact, I spent a lot of time in my early parts of my career just doing very early stage exploration and prospecting for a variety of different companies in a variety of different continents around the world. So I met Nolan over at the very, very early days of Silver Wheaton. We were the first two full-time employees there at Silver Wheaton. This was back in early 2005. That's where we met and got to know each other. Of course, Nolan has a finance background. He's an accountant and did really a lot of finance and acquisition work early on in his career. I came more from the technical side, but I also had a background in doing some investor relations. That, in fact, was my role at Silver Wheaton at the time. But we are really the two co-founders of the company. And back in 2009, we started up Sandstorm with the idea of really taking advantage of multiple commodities, but really focusing on that gold part, but focusing on, a big difference is that we wanted to find and attach ourselves to projects that were going to graduate, that we expected to graduate to much larger companies in the future, thus being able to provide for shareholders that greatest of value from royalties and streams, which is that exploration and expansion upside that we really, strongly and passionately believe is that true number one value driver to shareholders and the best part of this model of royalties and streams. So, Shad, we've been involved in royalties and streams longer than any other management team, and we've negotiated more of these deals than any other management team. We've seen how these have grown up over time and evolved over time, and we've made some of those mistakes in the past as we've created them, and we've understand really how to create that best value in that space. And that's something I think that gets both Nolan and I and the rest of the team here at Sandstorm really excited on a regular basis.
Well, let's dive into that a little bit further. Let's get into the portfolio of assets. You mentioned in the onset that you had, close to 40 that were bringing in income to the company and cash flowing. Some of those have grown up over time, but you also have a huge stable of exploration and development stage projects that are moving down the pipeline, de-risking projects, making some discoveries, a huge amount of drilling across the whole portfolio of royalty assets with all the different partners. Since you get to visit a lot of these projects and go on site visits and you have that technical background as a geologist and analyzing the properties, what would you say to people about the rest of the portfolio that doesn't get daylighted as much when analysts look at it, but that is growing and moving down the pipeline of development?
Yeah, listen, that's the thing that really kind of gets me so excited about this business. And, being a geologist, so much of it is really about this idea of upside associated with these projects. So, we only get valued as a company, and I would say we even get a discount to really what our current kind of cumulative cash flows of our producing assets are today. Those producing assets themselves, they have a tremendous amount of upside already. Things like Hyundai, things like Bonikro, Caserones, Cerro Moro, these are all projects in Chapada. They have a huge amount of upside potential associated with them. But when you look beyond those producing assets into these more development assets, again, you have really long lists of projects that can be producing that are getting more and more money put into them and kind of moving down that road into production. When I look at things like the Barry project, which is now part of Cisco Mining. That's something that we've been involved in for quite some time. This is getting folded into that overall Windfall Lake project, which is surely going to be one of the biggest Canadian operating gold mines in the future, Bayan Hyundai. These are projects that we got involved in amongst the first drill holes, and next year it's going to start producing. Things like Corani and Bear Creek Mining. This is the project that has the world's largest permitted undeveloped silver resource in the world. These things have garnered a tremendous amount of interest in this higher commodity price environment. So these are the things that I love to talk to about, because people just don't really realize that they're sitting there in the background. And when you take a look at the scale of these things, you show them how big they are, it really becomes extraordinarily interesting. And they say, wow, with a little bit of work and at these higher commodity prices, these things make sense. It looks like that capital could really flow into them at almost any time for these things. So that to me makes it really interesting, and it shows. It gives us something that we can really point to that's bought and paid for projects in the portfolio that might become huge cash flowers for us in the future.
Yeah, I think it's one of the aspects of the royalty business that even sometimes the analysts that cover the space overlook, because they're just totally focused on cash flowing assets, and they neglect the assets that are growing and building mass and maybe getting into stronger hands or making new discoveries or hitting permitting and developing and metallurgical milestones and are moving down the pike, and they will be the future revenue for the company that are really not factored into the current valuation. And to that point, you've got a really nice slide in your slide deck that talks about the Sandstorm's future is under construction. And these are assets that are literally being built or have just been built. Obviously, the big news, and you just press released this recently, was Equinox's Greenstone mine having first gold pour. Let's maybe start with that one. That's a nice asset in the stable and a nice win for Canadian mining.
Yeah, listen, I think that's a real important point, and it even gets back to what you were talking about earlier, this whole valuation and comparative valuation. That's one thing, but another important thing is this idea of what percentage of your NAV is actually cash flowing today. And we get a big step up in that when we see Greenstone actually hit that cash flow and we start receiving material from that. We've been in this sort of 50 to a little bit over 50% of our NAV in production right now, whereas as we get to see the Greenstone come in, and then as we see Platreef, that starts pushing up towards 75% of our overall NAV in cash flow position today. So that's something that we really haven't been at since sometime in really 2012. And we know that there's a direct correlation for sure for a company's valuation and where they trade at EV to EBITDA multiples, where they trade on NAV multiples, is how much of that NAV is actually cash flowing today. So Greenstone makes a huge change to that. That's, again, like you said, one of Canada's new exciting gold projects. Canada's fourth largest gold mine, over 400,000 ounces production in the first 4 years of this. They've got a lot of ore stockpiled there on site. They've got the mill up and operating now. It's Equinox's Gold's real cornerstone asset, and really what all their growth is at. And we can be very proud as a partner in that project to see that it was able to be built and get put together and start operating very close to being on time and on budget, which has been a real challenge in the Canadian mining environment for projects of this scale. So that's great. Seeing kind of how Platreef is evolving, that's extraordinary too. I was actually just at Platreef really only about 6 weeks ago. That's going to be a really extraordinary project. They're starting off smaller in terms of phase one at only 800,000 tons per year. That's starting next year. However, the real story on Platreef is the scale of it. When you go on site, boy, a really extraordinary site visit. It's going to be Africa's largest underground mine. One of the biggest mineral haulage shafts in the world is being built there on site. I had the pleasure of being taken through the project by an amazing team, a team that's mostly replicated to those Kamoa projects in DRC that Ivanhoe has done a remarkable job of really getting that mega project up and going, and in a much tougher jurisdiction, less infrastructure available to it. So that's an amazing project too. And then again, too, Hadman, and another project in that pipeline that's that future in production or in construction. I had a chance to go there a few weeks ago as well too. And again, it's so exciting going on to that project because it's got such an amazing grade. It's such an amazing ore body. And for the first time, started seeing some of those early works projects, those tangible assets, to start seeing some site preparation, some of those road upgrades really starting to happen there. It really reinvigorates you on these projects and gets you excited to see them start getting into those construction phases and ultimately the production part.
Well, and I want to ask you a follow-up because when I talk to people about Sandstorm, Hod Maden almost always comes up as something where I don't think a lot of people, Dave, have kept up to date with how the terms of the deal have changed over time from how they were set up initially. And also, I don't think they realize how close it is to actually moving up the batting order to get into production and what a significant contributor that'll be. So could you also unpack for folks listening the journey that this asset's been on inside of Sandstorm and how the deal terms are set up now compared to how they were initially?
Yeah, that's a project again. Like, luckily, we were able to really seize some of the results, the initial drill results that were coming out of that, allowing us to make an investment into what was the minority owner of that project. That got us, we got excited about this project right from the first time we saw the first drill holes. And we ended up as Sandstorm, as an opportunistic bid, we were able to pick up and actually acquire within Sandstorm that UK-based company that had that minority ownership. So we actually became minority owners of that project, with the operator and the majority owner being a Turkish company. They continued to push that project forward, get the feasibility study done on it, go through the permitting process. And during that time, we actually ended up selling our stake to a company called Horizon Copper. And in exchange, we took back shares, but we also extracted a gold stream. And I think that was an important point because as a royalty and streaming company, having a 30% minority interest in a project is not exactly what our shareholders want us to see. However, we got that at a really cheap level. We were very opportunistic about that. And we had a plan to really convert this. And part of that was really this idea of being a part of Horizon Copper. So we were able to sell that interest to Horizon Copper, but also extract what our shareholders do want to see, which is a very large gold stream from that project. So now we're no longer owners. Horizon Copper is a 30% interest owner. Lydia Made in Çelik, which is the Turkish private company, has 60% of the project, but the operator of that asset now is a company called SSR Mining, which is based out of Denver. They're already partners, mining partners with Lydia on different projects in Turkey. They're the ones that are slated to get this project up and going. It's permitted. It has its EIA passed. It has its forestry permits right now. We've started seeing work done on those early works projects. So it's going through the process now of getting the project financing put together. We're hoping that even though it is in Turkey, the economics will speak so generously because at call it $2,300 gold, they call it $4.50 copper. the economics that come off of material, which is effectively 12 grams gold equivalent material being mined. The economics on that project are really fantastic and allow you for a quick payback on something that, frankly, a project that even us, even myself, who has seen hundreds of projects pass by, to me, this is kind of like a once in a lifetime opportunity to be attached to a project that has such extraordinarily strong economics attached to it.
All right, thanks, Dave. I really appreciate that update, and I'm sure a lot of people listening will as well. And it's going to be exciting to see it keep moving down the road here into production and be a significant part of the growth in the gold equivalent ounces. But also, I think one other asset we should mention, and we didn't have time for this last time, but I think it's important for the longer term growth picture, is the Mara stream you have with Glencore. It's another cornerstone asset for Sandstorm, and it's a big part of the growth, let's say in a couple of years. So maybe just highlight why the company is excited about the Mara stream.
Yeah, so listen, the Mars stream is fantastic. To me, it really fits exactly what Sandstorm, I think, has been known for over time, which is being able to identify and opportunistically invest in a project that's going to graduate into really a more substantial partner. And that's, in fact, exactly what we did. This project was originally part of our Yamana deal back at the end of 2015. It was the smallest part. It was really kind of a bit of a tag along on it. And what we bought was the option to purchase a gold stream in the future. But that option was priced, capped out at $1,400 gold. So when we looked at that, we said, hey, this is a project that at some point is going to get into production. Probably not in the hands of Yamana, because Yamana is just not big enough to put such a large copper gold project into production. Fast forward to today, Yamana is no longer holds any kind of interest in it. It's been combined with another existing operating mine called Alumbrera. The ownership of the project has been consolidated under Glencore International, one of the world's largest diversified mining companies. They're really pushing this project forward as one of their lowest capital intensity copper projects in their portfolio. They need to push the project forward. They've combined it with Alumbrera, which is about 40 kilometers away. They're going to utilize that existing mill and tailings facility and concentrate pipeline to use on this. So when we first made this investment in 2015, this was a greenfield project that a company that had their hands on it wasn't going to be able to figure out how to finance it. Now, since we've owned that, it's turned into a brownfields project. We've locked in the price that we're going to pay on this, and it's probably about $100 million in the money on this asset. So for us, once we finally make this payment, which we're kind of expecting, and I'm starting to make that payment in 2026, it'll be one of the most accretive and best price deals that exist there on the market. So we're really excited about that. And that's another project that could get us as much as over 20,000 ounces per year in the portfolio on an annual basis, something that we're really excited about. And if we were to do nothing between now and 2028, don't do any other deals except for this one, this would still put us over the edge in terms of our peer group, in terms of growth within our portfolio between now and 2028, 2029. So again, another great project, really proud to have pulled the trigger on that when we did, and are starting to see daylight as to when we see cash flow on that asset.
Yeah, it's going to be such a big part of the growth story in Sandstorm. So I really appreciate you breaking that down, Dave. And I appreciate you spending some time with us with the KE report to just give us a nice update on Sandstorm Gold. If people listening in want to follow along with the company news, definitely click on the link below this interview. It takes you directly over to the company website, right to their news section. And also pull up the slide deck and look at a couple of the slides that talk about their future growth over the next 5 years. you see more of a shift to precious metals, and you see how some of these assets we discussed today play into the longer term growth profile. And Dave, as always, looking forward to our next conversation.
Yeah, thanks so much, Shad. I really appreciate you having me on the show and getting a chance to talk about Sandstorm.